why is my bank not care about me? Like, why is my bank just continuing to ride on their fat profits and not innovate and pass on their savings and their advantages to me, the consumer? Like, why should I be a consumer if they're not continuing to work for me? And that's what SoFi is relentlessly pursuing.
Hey there, Lincoln here from bullacademy.org. Today we have the pleasure of speaking with Tyler Okland, who is an investor in both Opendoor and SoFi, as well as writing for Seeking Alpha, doing his own research. As I always say here, do your own research and then sharing that with the community so that we can all learn and make better decisions together. And Tyler is very active and popular on Twitter, so you should definitely check out his Twitter after watching this video. This video is about SoFi, but we also have another video from this conversation that we had on both Opendoor and SoFi on Opendoor. If you haven't seen that video, go check it out. It was an amazing conversation that we had, very insightful, and it was long, but definitely worth the watch. Lots of keys were shared by Tyler, and our discussion really revealed many of the bull cases and some of the bear cases for Opendoor. So if you're investing, you want to know both of those. And we're going to do the same thing here with SoFi, talking mainly through the bull case, but also getting into some of the downsides that we see and some of the concerns that we have as investors. Because we're both heavily invested in these two companies, Opendoor and SoFi. So as I always say, you want to see the full picture. And that's what we're going to do today. So I really hope you enjoy this. Tyler hopes you enjoy this. And if you do, don't forget to hit the like button below, subscribe to the channel, hit the notification bell so you never miss any of our future videos. We'll definitely have Tyler back on in the future. There's so much to discuss here, and we're going to get to it in a second. But before we get to that, just a reminder that if you want to support this channel financially and get more access to me and get direct answers to your investment questions, then join us over at patreon.bullacademy.org, where you get to engage on our Discord channel where we discuss the stock market in real time every day by sharing news, rumors, and new investment ideas so that we can all do our own research and then come back together and collaborate. There's many of us in there, and I will be very happy to have you join us. Now, let's hop in.
Thanks, Lincoln. So my name is Tyler Okland. I'm a surgeon and physician at Stanford Hospital here in the States. But by night, I am a finance writer, and I'm really excited about chatting about finance and researching it deeply. I write a Substack called The Operator.
Yeah, so let's make a transition to SoFi. I really appreciate everything you said on Opendoor. Like I said, there's so many synergies between Opendoor's business model and SoFi's, how they operate. And of course, they're both in growth stage. They've been working on developing their concepts for a very long time. And they're at a point now that they both just recently went public, still not making profits yet, but they have projections to get to the point where they get a lot of market share, with Opendoor trying to get to all 50 states or close to it at least, and with SoFi trying to acquire market share and take away some of those 500 million customer accounts that traditional banks have, right? And if they can do that, if they can acquire some of those customers, they can eventually get to the point where they have 10 million, 20 million, maybe even 100 million customer accounts. That's a long way out, but that's how you get to the profitability in the future. And because they offer all these services in a one-stop shop, they get to, just like Opendoor, they get to control the whole experience of the customer and make them happy and keep them coming back, telling their friends about it, and building up that whole, the lifetime value of the customer, right? So I'm speaking to the choir. You know all of this. So I'm just curious on what your overall thoughts are on SoFi itself.
Yeah, I agree. I mean, I think the similarities are very clear to me in terms of what they're trying to do. But SoFi is different in that it's a personal finance company, and I think at the heart of some of the pessimism around investing in SoFi is this fear that SoFi will become a jack of all trades, master of none, right? SoFi has three different solutions. So it's got its lending products, it has its personal finance products, so like checking banking accounts, investing, things like that. And then it also has its Fintech as a service platform, or infrastructure as a service platform, which is Galileo and now Technisys. And I think, when you look at at SoFi's pure play competitors, so like Robinhood for the personal finance, Upstart for the lending division, and then Marqeta for the fintech vertical, they all trade at higher multiples than SoFi. And I think that's a really interesting arbitrage opportunity, because increasingly, I believe that fintech companies, as opposed to having a diversification discount, they'll be getting a diversification premium. And so what I mean by that is, look at Robinhood in 2021, right? Like, they are an investing company. And because bad things happened with investing, Robinhood's business has tanked. And their original estimates had to be slashed, right? And consequently, their stock price has fallen precipitously. Upstart, on the other hand, personal loans are doing really well, right? Like, interest rates are really helping. So personal loans are crushing it. And so Upstart's doing really well. But SoFi is able to lean into every different type of situation, in terms of macro headwinds or tailwinds, and flex its business around that, which means that, what might be a headwind for one of its pure play competitors could be a tailwind for one of SoFi's businesses. And I think that's really powerful, and it should be rewarded. And that's part of the reason that I'm so excited about, the stock price relative to what SoFi I think should be worth, because it's diversifying in such a powerful way.
Yeah, everything you said is completely, I completely agree, of course. And one thing I want to touch on is that quote, the Jack of all trades quote, is actually misquoted from Shakespeare, and because people want to write their own narratives. But I actually did a video on what the actual quote says. The actual quote is that a jack of all trades is a master of none, but oftentimes better than a master of one, right? So that's what people leave out. They always say the jack of all trades and they're not a master of anything, but they're better than a master of one, for the reason you laid out, that they get to lend a hand in various areas. If one place is doing poorly, the quote originates from the theater, where the jack of all trade was able to go around and help out people across the stage. When he did his part, he knows his part very well. So he will go around and say, hey, let me help you out with your lines. Let me help you out with your costume and your acting, all of that, right? And so with the jack of all trades like SoFi, you can be good at your main thing, which is lending, right? So if you have lending and you're great at that, and you make your bread and butter from that, you're gonna go around and say, hey, you need a way to manage all of your investing. So here's an investing app. Come here. Let's invest. Let's build you some a diversified portfolio, because everyone wants to be diversified and be safe. So we can do that for you. If you want dividends and weekly income, we have that too. Do you want to buy a house? We have a mortgage, right? Do you want to go to school? We have a student loan for that. Do you want to manage all of your finances in one place and see what you're doing, how you're spending, how you could budget better, and what your real estate's worth, what your stocks are worth, all in one place? We have that. Do you want a credit card? We have that, right? So I much prefer that over someone who just says, oh, all I know is how to invest, right? Robinhood's great, but they only really good at investing. That's all they do. And Lemonade, again, all they know is insurance, right? They can't compete with Opendoor. So as a consumer, a customer, I want the one-stop shop. I want the place where I could just do it all. But then as the business, as you said, if interest rates go up, SoFi's lending wins, right? Of course, they're going to have a little bit less customers, but each customer is going to be marginally more in value for SoFi. And when interest rates go down, they make more money from all their other services, right? From their financial services and across the board. So having these options, again, optionality is where SoFi really wins. So yeah, the jack of all trades line always gets me, because I'm like, what's the next line? What's the next part of that sentence?
No, that's actually really cool. I didn't know that. looking just to double tap this point, like looking at 2021 with all the headwinds regarding like SoFi is a student loan company, right? Like historically, for many years since founding, SoFi is a student loan company, and
Mhm.
student loans have been on hold, right? Like there's been a moratorium on student loans like for over a year now, right? Like there's been a very long, and they keep kicking it down the road, and somehow SoFi was able to beat revenue and adjusted EBITDA
Mhm.
projections, which were based on those student loans coming back. And I think that's a testament to how valuable this diversification model is because they're able to monitor all these different headwinds and flex into those business opportunities that are most dynamic, that will give them the greatest return on investment. And yes, I think at this time, their products or anything outside of lending might not be the best pure play product in the market, right? Like their investing app is not as good as Robinhood. Um, their bank account might not have all the features that one of the bigger bank accounts does. Maybe not. But what I would say about this is because they have superior economics as a consequence of their diversification model than their competitors, over time they're going to continue to be able to invest more R&D dollars into those products to make them top of line, to make them better than their pure play competitors who might be able to get more customers initially, but as that difference in product quality begins to decline, as SoFi is spending more money on those products, developing them, I mean, it just becomes this powerful fintech opportunity that I don't think is present in any other of the fintech companies that are trying to build a super app right now.
Yeah, and like Anthony Noto always says, everyone says they're building a one-stop shop. We're the only ones who's done it, right? And then we have the whole we talked on having the ability to invest in various areas using their top of the line, their best services like the lending. They can take the money from there, invest in their investing app, which like admittedly is not that good right at the current moment. But they're now rolling out options and they're now rolling out margin accounts, and they're planning on getting to options and all the other parts of an investment app that aren't there yet. So they're taking all of this, they're growing fast, and like you said, they're beating expectations, revenues, they're growing towards profitability. And then we haven't really talked about their technology platform yet. And this is the area that no one talks about when they have those short reports. Whenever I read an article on SoFi, first thing I do is Control F Galileo. Like if you're not talking about Galileo, you're not talking about SoFi. Because that's a huge part of the business. The technology platform is going to be about 25% of the revenues, right? Top line. And then, as we see with AWS, it's a very small part of the revenues, but a huge part of the profits, right? So if you're not talking about that, and the fact that they can make all those investments in Galileo, and then use the profits to invest back into their financial services, right? I would love to hear your thoughts on just Galileo, if you have any, and just what you think that can become.
Yeah, it's a really interesting topic. And when I wrote my article, it really wasn't until I wrote my article on SoFi that I was able to reverse engineer sort of the strategy of Galileo and why it's such a powerful optionality for the company.
Mm-hmm.
Um, but I think part of it is it's sort of a black box for people, and it's sort of like it's got a lot of buzzwords, right? It's like the AWS of fintech. It's like a cloud service provider, and so people don't really look deeper. They're just like, oh, it's a fintech opportunity. But the real idea here is that if you think about an investing app, so take something like SoFi, all of the different features on SoFi, like the rewards features, right? The lending as a service, the button that allows you to get instant withdrawal, or the code that allows you to send money peer to peer instantaneously. Those are all APIs that were built on Galileo's platform for SoFi. And so this is really important because SoFi does not have to contract out all of these different coding apps, all of these different designers to make these functionalities for its products. In fact, all of that's in-house. So there's a cost advantage there. But the other thing that's really critical to know about Galileo is that all of those products that we can find on SoFi can then be sold as APIs to all these other different fintech companies
Mm-hmm.
like Robinhood, right? So the functionalities that we take for granted, like options trading or one tap to execute a trade, or whatever it rewards, all of those are products that Galileo is selling to these different customers. And Galileo started as really just like a card issuing service provider. So like the technology behind making, issued credit cards work, that's like a Galileo product. It's also a Marqeta product. And Galileo makes money every time a card is swiped, right? So that's one of the models. But very similar to AWS, which has gone from being one product to hundreds of products. Galileo is doing the same thing. So all of these different services that SoFi is internalizing on its own platform are then being sold to all the other fintech companies in the world. Now they have over 100 million accounts powered by Galileo, using all these products that can be found on SoFi, which is a super cool idea, right? Like you said, it might account for 25% of revenue, but the profits are astounding at scale. Not just from the services that Galileo is charging, but also the savings that SoFi gets because they're vertically integrated and they own the entire stack of the development and the implementation of their software.
And then we get into the competition with Technisys, or Technisys, however you say it. And I just did a video recently on just why it's such a big deal. And the whole point there, again, with something from your article, it was on the Opendoor one, where you talk about, I believe it was Peter Thiel, saying competition is for losers, which I agree with, and it's going to be a monopoly. But if you're going to have competition, which we're going to have in financial services, right, we can't really control that too much. It's a huge market. Customers want to try different things. They have multiple bank accounts. If they're going to have multiple bank accounts, hey, great, right? That's fine. But if we can win because from all those accounts, if we can take some profits from all those accounts, even if it's not on SoFi.com, then great. I appreciate the competition. They get to have their customers. Customers get what they want. They get different services and different options. But we still make money from 95% of the new banks that everyone's moving to. And with the traditional banks, if they want to become an actual bank or a digital bank and provide those services to their customers, they're going to have to use something like Galileo and Technisys, right? In order to even become a digital bank, they have to use a Technisys. So if we can offer those services to them, then we win. It's a win-win for everyone. So if you're familiar with the Technisys acquisition that just recently happened, I would love to hear just your thoughts overall, or even granularly, on the Technisys deal and how that fits into Galileo and SoFi's plans.
Yeah, I haven't done like a technological deep dive into the acquisition yet. I certainly did a financial one.
Yeah, let's do it.
Yeah, I gotta be honest. I'm not crazy about the concept of like using equity to acquire a $1 billion price tag company today, given SoFi's stock price. I think that's part of it. Like at the end of the day, the best time to use equity to acquire a company is if you think your company is overvalued. And SoFi is anything but overvalued today. And they have cash. So I kind of was scratching my head about that. I would have preferred it to be at a different time, but we don't know behind the scenes what's going on. If there was a competitor who, was also bidding and they felt strategically like it was the right move, I'm sure there are good reasons for it. I did like I think I posted like how I modeled for the revenue. I don't have it off the top of my head, but I mean, long term, it's probably a good move, at least in terms of revenue and cost savings. But we really don't see a lot of that until 2025 through 2030. Yeah, so it's hard to say. I do think it's going to help materially with revenue over the next few years, but at the dilution level that it costs SoFi, I was definitely scratching my head.
Yeah, and that's completely fair. In 2019, I believe it was, we bought Galileo for was that 2020?
That was a great deal.
Yeah, that was like half stock, half cash, right? Something like that.
Great. Galileo was worth probably 3 times that, in retrospect. And I think, if they had bought Galileo in 2021, they would not have gotten it for 1.2 billion. That was a fantastic. I mean, in 2021, revenue I think was just shy of 200 million. So a 6x forward price to sales on
Mhm.
an industry defining
Yeah.
platform. That was a very strategic price. But I think that's the lens that you have to use when you're comparing the acquisition of Technisys is like pretty much the same price as Galileo. Is it really giving you the same optionality that Galileo did? And if not, then it seems like a strange time to use equity.
What about, because you said in retrospect, but what about the fact that SoFi is trying to expand beyond USA and that Technisys is a big player in Latin America, which has been a early adopt or what's it called, more early adopting of digital banking than North America.
Yeah. Yeah. I mean, SoFi's already growing pretty rapidly in Latin America. I mean, they have some of the largest neobanks in several of Latin America's biggest countries. So I don't know. I don't know if that was absolutely needed. But again, I don't have access to like the strategic rationale for it. I'm just looking at it from a financial perspective, and like anytime we're in like the worst crash
Mm-hmm.
of the past 12 years and your high growth unprofitable company is acquiring another company in an all equity deal, I think you have to be like what was the reason for this? I mean, the other thing that's important to mention is the difference in valuation in the private markets versus the public markets right now has never been wider. I mean, it's a chasm. And so Technisys would not have the multiple, in the public markets today that SoFi paid for it.
Yeah.
And so
Was it
that's
like
another thing to what's that?
11, 12x?
Yeah, I mean that's deeper than I think even Marquetta today.
Mm-hmm. Yeah, it's definitely fair from a financial point to be worried about the acquisition. But when I look at it from a product and just strategic point, I feel like it's a no-brainer given that digital bank is the future and all these traditional banks are going to have to make that transition. And including SoFi, they're paying someone else right now for the core of their business. So if they can bring that all in house and save money, which again they're going to be starting this year, saving between now and 2025, saving something like 70, $60 million a year, and then actually accelerating after that, right? So I think within the next 5 to 10 years, we're gonna have, even on the financial point, it's gonna be fine. But yeah, I agree. It'd be better to have it at least partially cash, right? But yeah, like you said, I'm not sure why they went with all stock in this deal. But the nuance really is, or the caveat really is that, hey, if the people who built this company are going to stay with us and help us build into the future, then I think it's worth it because they have stock in the company, right?
Yeah,
Yeah.
yeah, and I mean to your point as well. Like I said, I haven't necessarily dived as deep as I'd like to into like the technological and strategic advantages of a company like Technisys, and so I have to do that myself. That said, SoFi is my second largest personal holding, and so I'm increasingly critical about the companies that I'm more concentrated invested in,
Hmm.
and that's just being clear eyed about the opportunity. Like I trust Anthony Noto, and I'm sure he had a good reason for it, and I'm sure that there's strategic rationale and then some. But at the same time, I can't just be like, oh yeah, like everything is good. I'm gonna have like my own instincts about things, and I think he's probably not happy with how this was done either. And it was probably just like we need capital for SoFi Bank, so we can't use that on Technisys.
Hmm.
Maybe there's a competitor that's bidding for this, or maybe they want to go public at a different valuation. We won't be able to get it at this price, and so we got to just do this now.
Yeah.
Whatever it was, I'm sure it was a good reason.
Yeah, definitely. And again, we'll see how it plays out. But now you brought up SoFi Bank. Oh, actually, before we get to that, I want to talk about just quickly your point on being critical of your investments. As investors in general, you have to see the full picture of your investments, good and bad. Otherwise, you're gonna get blindsided. But even more so when you're investing in like 2 or 3 companies with all your money, you need to be extremely critical of them, right? And really do the research on both sides of the coin so that you don't lose half of your wealth overnight because something crazy happened, right? So I'm glad you brought that up because people who are watching, they see me investing all my money in 1 or 2 companies and like, Lincoln, are you okay? The SoFi's down a lot right now. Are you okay? I'm like, yeah, it hurts, but hey, I've done the research and I believe in the long term. And given that we're down, that means that if I have to get back to break even or even higher than that, I have a great opportunity now to buy at a much cheaper price, right? So if I see SoFi going 2x to get back to break even, that means I have a 2x opportunity right now to buy even more shares, right? So there's multiple ways to look at it. And again, back to your point, it's very important that you do the research into your companies on both sides so that when things are going well, you don't just get blindsided out of nowhere that your company just spent all of their money on some company that you don't even understand, all in stock, right? So yeah, definitely a good point. But let's get to SoFi Bank and what the importance of SoFi Bank is to SoFi in its future. Why was that such an important thing to complete? That we just completed the bank charter acquisition last month or 2 months ago, whenever that was.
Yeah. No, I mean, it's massive. I think it's like unlocking a superpower or you know, like the ring of power. Like it's massive for the company, the opportunity to have banking. And it's not just the fact that they can originate loans or give out loans at lower cost of capital, right? They don't have to borrow the funds that they're lending to people anymore. They can just use their own bank to do it. They can hold those loans on their own balance sheet, and so their lending division becomes much more profitable. That's important because lending is their biggest contributor to profits right now, right? Like that's their mature business is lending, and they're using profits from their lending division to fuel growth in Galileo and Technisys, and then also they're investing in personal finance sectors. But the other thing is because they have a lower cost of capital, they can pass on those savings to the customer. And this goes back to my original thesis for Opendoor too, which is if we assume that everyone is a commodity player, which I'm not saying that everyone is, but just like from a base, if we underestimate everyone and just level the playing field and say everyone is a commodity player, the lowest cost structure provider will win. That is like a basic tenet of business. If you're the lowest cost structure provider, if you can make the most from the lowest fees, you're gonna win the category. And the reason that pertains to SoFi is because if they can pass on their savings in cost of capital to the consumer in the form of, as opposed to 0.01% APY in a checking account, it becomes 1% APY. You've got a massive advantage over incumbent banks. You've got a massive advantage over peers. And that doesn't just drive profits, that drives massive growth, massive revenue growth as well, massive membership growth, because people will say like, why am I direct depositing my hard-earned paycheck into my Bank of America checking account, which is giving me 0.03% APY when I can be making 33 times that in a SoFi account? And it's not like, oh, I'm going to get rich quick by putting my money into a 1% APY account, right? Like it's not that big of a value proposition, but just relatively, it's like, why does my bank not care about me? Like, why is my bank just continuing to ride on their fat profits and not innovate and pass on their savings and their advantages to me, the consumer? Like, why should I be a consumer if they're not continuing to work for me? And that's what SoFi is relentlessly pursuing, is caring for the customer and bringing all these services in-house so that they have a lower cost structure as a provider. They don't have to pay customer acquisition for all these different services that they're offering. And as a result, the customer gets to make more and they get to be closer to their own personal finance dreams. They get to be financially independent. And that's super powerful, right? Like my 2 core holdings, Opendoor and SoFi. Opendoor is empowering the American consumer to buy and sell the home of their dreams. And that's never happened before. SoFi is empowering the American consumer to be financially independent. And they're doing that by passing savings to the consumer. They're both doing the same thing. They're just doing it in slightly different verticals. They're both fintech players. But I think that's really the opportunity that the bank affords SoFi, is to provide world-class consumer value through all their financial services products.
Again, you said it perfectly, but getting back to your point on why does my bank not care about me, right? They're giving people 0.01%. That's like the bare minimum, so it's just so they can say they're doing it, right? And then you look at SoFi at 1%. Even 1% is a lot of money for a poor person. I've been poor, right? If I have $1,000 saved, and I'm like middle of the way poor, I have $1,000 saved, and 1% can pay off maybe a part of my phone bill every month. If I have 10,000 saved, that pays off my whole phone bill and maybe my Netflix bill, right? That's a lot of money. That's a huge deal. So yeah, I even if it's not that much, it just says that, like you said, the customer feels appreciated. That I'm not being screwed. Like you said with Opendoor, I'm not being maximally exploited to in order for this company to make all the money, right? So it's the same deal. Just on Anthony Noto, I'm curious what your thoughts are on the SoFi Stadium deal.
Oh, I think that was awesome. I mean, I think that was a great decision. It's not just any random stadium, right? It's like it's the most expensive building I think ever built. It's like $5 billion to build. I mean, there might be something in Abu Dhabi or something like that that's more expensive, but SoFi Stadium is a palace, right? It's a coliseum, and I think it's going to become, like the Madison Square Garden of the West Coast,
Mm-hmm.
in the way that they're positioning themselves. I mean, you got the Rolling Stones, BTS, Justin Bieber, the Super Bowl, the Olympics. Like it is the destination for entertainment, and it's in Los Angeles, right? Like it's an iconic city. There's two football teams that play there, and it costs 300 million over the course of 20 years to have SoFi branded on that stadium. And I think I think it's not just great advertising and it's not just great unaided brand awareness, but it's the right kind, right? It's like it's associated with something that's cool, and I think that that's really critical when you think about a personal finance company that's appealing to millennials and Gen Z as they're starting to, enter into their own journeys for financial independence. Um, it's a really well positioned piece of marketing that's going to continue to pay dividends over the long term. Um, and and like people have said, oh, why is this such a big deal? Like there's been like an Exxon stadium and all that stuff, and it's like that's fine. But SoFi is trying to become one of the top three bank names that you name when someone asks you, like,
Mm-hmm.
name five banks. Right now, people aren't going to say SoFi, but increasingly as SoFi becomes, known as this massive consumer brand that's really empowering the American to find financial independence. They see the name on SoFi Stadium, they go to concerts, right? Performances. I think that that's going to really, really help SoFi achieve that level of brand awareness.
Yeah, and I'm glad you brought up that last point about just being in the conversation. I did a video of a few weeks ago. I haven't published it yet, but it was really on explaining the importance of the SoFi Stadium, and it goes to what you said that people need to be able to say SoFi is a bank, right? They need to actually know what SoFi is, and the importance of that, even more than free marketing impressions uh, and whatnot, it's all about having the trust, which is what Anthony always says: trust, 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 because they're going to be spending millions and millions of dollars on advertising, on marketing, on sending out cards to people with SoFi offers, like Upstart does, and Best Egg, and all the other lenders send you out paper, and they say, "Hey, we have a loan for you." But that's a huge deal for the customer. I'm gonna give you all of my information, right? I don't know who you are.
Yeah.
There's a bank who sent me, like they keep sending me they keep sending me these offers, and they're not even a bank, they're like a lender. I'm one of those lenders who facilitate loans. They're sending me these papers for months now that they have $250,000 they want to give me. And after a few months, I went through the process. I got to the contract stage. But along the way, I kept doing research. Well, who is this company? What they do? Why do they have such poor ratings? And the contracts in my email, I'm ready to sign it. I'm like, but I can't. I don't trust it, and I just drop it because I can't trust them. I don't know who they are.
Yeah.
So the whole point of the stadium is that people will know the name SoFi. And so when they get that mailer at home, they can say, oh, I know this company. I've heard of it. I'm not sure exactly what it is, but I know I've seen it somewhere. And when they go search it, they'll see SoFi Stadium. Oh, the Los Angeles Rams won the Super Bowl there last year, right? They'll see BTS. They'll see the end of WWE, WrestleMania, all of that, right? The NCAA March Madness Championship at SoFi Stadium, the Olympics, Summer Olympics coming up, I think next year or 2 years from now, SoFi Stadium. I know what SoFi is. So when they send me $30,000 on a card, I'll say, hey, okay, let me consider it. I actually know this company. I'm not going to turn them down. So it's all about that, just knowing who they are. So that when SoFi spends all that money on marketing, it's not just going to a leaking bucket that is just being wasted, right? I think that's really the value here.
Yeah, no, I think that's a great point. Like for your personal finance company, it has to be an institution associated with, trust. And the brand awareness feeds not just like, oh, this is a cool, Gen Z millennial fintech provider associated with like these fun experiences, but it also has to be a name that you trust. Yeah, I think that's a great point.
Yeah. And just to wrap it up on that is that this is what I'll cover in another video I'm going to release soon. Is that did you know that about 20 to 25% of all North American sports stadium are named after banks?
Yep.
There's a reason for that, right? It's a huge reason. That's exactly why. They want you to know who they are.
Yeah.
Yeah. We could talk about this all day. I don't want to take up more of your time. We've been here for a while now, so I'm going to let you go. I really appreciate you taking the time to talk to me about Opendoor and SoFi. Probably going to release these in 2 different videos because it's been way too long. But any last thoughts that you have on Opendoor and then SoFi?
I guess, the thing I'd say, when I wrote my SoFi article in January, I said the discounts of December won't last forever. And, again, I was early. It's continued to happen. But every day that these companies are growing rapidly and every day that their stock prices remain depressed is an opportunity to capture value that is inappropriately measured or incompletely captured, right? And so these are opportunities that if you have conviction and you've built up that muscle and you believe in the company, these are opportunities to create generational wealth, and that's really exciting. And Tesla, for example, is a great company, but Tesla has reached this point where it's not misunderstood anymore. It's valued appropriately and then some. And so I would love to be invested in a company like Tesla, but there's no arbitrage anymore between the understanding of the company's value and what it's actually worth. Companies like Opendoor and SoFi are in the stage where it's a show me stage, where they still have to prove themselves. They still have to convince the world of their value. And as a result, it's an opportunity to get in at like a private equity stage valuation. And that's really exciting for someone like me. I'd like to be invested in a Tesla, but I'd rather be invested as I was before it blew up. So I can gain value as the rest of the world finally catches on to what the company is really worth. And I think that that's something that we're going to see in these 2 companies, Opendoor and SoFi, my 2 highest conviction picks, because there's so much value that's not on the table right now that people aren't accessing. And it might be a long road, but it's one that, because I've built this conviction, it's a road that I'm willing to walk.
Yeah, and that is completely right, Tyler. And just to drive that point home, I bought Tesla on May 24th, right here.
Good price.
Isn't that beautiful? Everyone was saying, "Oh, it's going bankrupt," right? Everyone was. I kept reading that summer. I actually left my job right before that. That is going bankrupt. I sold a company and took half the profits from that company and put it all into Tesla. And then the next year it just blew up, right? So you might not see, like you said, you might not see SoFi and Opendoor get there that quickly because we're still at an early stage. But Tesla started all the way out here, and even before that, 10 years now, 11 years now that they've been on the market. And people who bought at those lower prices, even through all of the headaches and trying to go through manufacturing, they had a harder time than we're going to have with SoFi and Opendoor because they're all about hardware. Hardware is super hard, but we're in the software business, right? It's increasingly cheaper revenue, and we've seen the problems before. We're not trying to build a whole new type of car. We're not building rockets here, right? We're just building better systems, right? So fully agree with everything you said. And I want to just give you the opportunity to just quickly share any resources that you have for investors who are looking into Opendoor and SoFi.
Yeah. So I write a Substack called The Operator. I try to write an article once every 6 weeks or so. It's hard because I have a full-time job and the articles take a long time. They also are published on Seeking Alpha if you're there. And I'm loud on Twitter as well if you want updates on Opendoor, Palantir, SoFi, Unity, or crypto. That's kind of where you can find me, Tyler Okland. That should be the only one. In regards to resources that I use, it's really just like I watch every podcast, I read every piece of information that's written about the company, and I try to build that into a strategic narrative. Like I try to imagine if I was in the boardroom or if I was in the C-suite having those conversations, like why would they do what they did? And then build out the strategy from there. I really like getting into the heads of the founders or the leaders of the company. And so I watch all their podcasts, I read the books that they say were important for them. And I think psychologically that helps me align with the way that they think about building their business. My own sort of deep research.
Yeah, the best tool is Google, right? So yeah, if you want to do the research. And yeah, I appreciate you again coming here, giving us all these gems on both Opendoor and SoFi. I think everyone's gonna love this. Okay, that's it. I want to say thank you again to Tyler for joining us to discuss both Opendoor and SoFi this week as the markets go into turmoil for growth stocks at least. And of course, for all of the stock markets really struggling right now due to the macros such as the war between Russia and Ukraine and the Federal Reserve raising interest rates soon and inflation continue to grow. There's lots of reasons for the markets to be down, but I hope that this video really showed you why these companies are worth investing in for the long term and what you can look forward to. And of course, some of the headwinds that we have to get through in order to get to that future that we all want. So if you enjoyed this, I want to see more like it. I need you to do your part. All it is to hit a couple buttons. Just 3? Like, subscribe, hit the notification bell, and then comment. Comment your thoughts on SoFi, on Opendoor. Are you invested in any of them? Do you believe in their future? Are you trying to trade, or how many shares do you have? Let us know. I would love to hear from all of you, and I always do my best to get back to every comment. So let's discuss. And if you just want to say hi, I would love to hear from you. Hi. And of course, as always, these videos are brought to you by our patrons at patreon.bullacademy.org, who support this channel financially and help me brainstorm new video ideas to share with all of you by discussing the stock market in real time every day in our Discord channel, where we share knowledge, news, rumors, and new investment ideas so we can all do our own research and then come back together and collaborate. And it will be great to have you join us. So if you're interested in any of that, I would love to see you over at patreon.bullacademy.org. I'm Lincoln with bullacademy.org. Thank you again and have a great day.